Good evening. This is the Elliott wave update for the NASDAQ 100 for Sunday, April 17th, 2022. I hope everybody has had a really great weekend. I apologize for believing that the Globex session would be active and trading on Friday morning. It did not. It did not reopen, and there was no Globex. So this market has been closed until just about 40 minutes ago. So nothing really happened other than, let's just take a quick look at Friday. But first, I'm going to start again on our daily chart, basically restating what my view remains and where I've made some adjustments. The first thing that you're going to notice is that I've now added the supercycle third wave to our list atop of the current all-time highs in the NASDAQ future at 16,768. And I'm doing that because the market continues to signal to me that there's going to be more interest in moving the market lower, moving prices lower, to be more in tune with what's happening economically or beginning to happen economically, what possibly could happen economically. When you see the market start to turn and put more strength in that, yep, we need a little bit more correction. We need to keep correcting. And so even though it truly still is in its infancy, if you think about it in terms of the length of time that I believe the correction will take place, and the length of time that it's been in force, and so it's in its infancy. In fact, we may just be beginning an intermediate third wave down. In fact, I do believe we are now within that third wave down on an intermediate degree. And that's a part of a primary degree, first leg down of a corrective pattern. And so we again are basically just continuing to put through all the beginning stages. And so right now we're on an intermediate degree that we're going to count down on an intermediate degree. Once we have primary done, then we'll have we'll continue to build. Right now we've got the minor, we've got 5 waves down on a minor degree level, and that formed the first wave of the next degree up, next higher degree, and that is intermediate. And then from there, we did get an ABC, although we tangled with this high that we had at 15,268. Would that be it? Was that the high of the highs for this particular sequence? And now we're going to drop again, as I often refer, we're going to fall off the cliff. We got a little bit too close, kept taking pictures, stepped a little close, kept taking pictures, feeling we were safe, and boom, we fell over. Now, and I do think that that's what we're in. And what's going to be inside that intermediate degree third wave down will be 5 waves of minor degree. And that's where a little bit of the sticky point came in. So let's drop down to the hourly chart, and we're going to continue this update. Well, I dropped to the 30-minute. I can just change. Let me go to that hourly. Works a little bit better. So here we are. And we have intermediate one, which, by the way, I did change. So the 13,881, I believe it was 881. Let me just go over and double check. Yes, 13,881. That low from on the 12th is the completion point for minor wave 1. So this whole move is in fact the ABC, and I am labeling it minor 2. And the particular reason is because it is an ABC complete, and now we're coming down, and we broke the low of where wave A started. And so that leaves this actually would be complete. Now, whether this is going to decide that it's like an ABC and that's an A and this is a B, which it shouldn't be, because again, we're in a wave 2 correction. So I would not suspect that a move that is to go, if the overall move is down, the trend is down, and we're breaking the lows versus completing an A, this is a B, A B would not, in a second wave position, the B wave should not take out the low or the starting point for that lower, higher degree, the minor wave one. That's just my opinion. So I believe that what we got going on here is a very strong possibility that this in and of itself is an ABC up, and it will be labeled minor 2. And so we did actually get above this high, which was the top of minor 1. So in other words, this is where minor 1 started. We did get above it. So in terms of an A, B, C, and the C wave did kind of come up and put in a slight new high. That's what we kind of look for in a wave 2. We didn't get very far, but we did get above it. Now, breaking down, you can see on the hourly chart. Come on, please. There you go. I don't know why it does this. All right, so now I'll go to my 30 minutes, excuse me. So in all essence, what we've got is pretty strong downlink. We had the ups and downs. And again, let's go back. Friday was an expiration. It was a monthly expiration. I did anticipate that we would end up. I felt that we had a little bit more to go on to the upside, and I believe I was talking about breaks above this 200 moving average, which we did get, but only because it sank. So we had a fair attempt at a rally right there. That was on Friday morning. So that high does become the completion point, and an A, B, C. And then we had pretty much straight down from there. We had a few hours, but even into that close, into our close, there was the selling was heavy, period. Versus, well, that was today. This is versus, buying it up into the close. They sold it into the close. So you can see tone change, I feel. I can see volume is like now they're taking a little bit more seriously that we need to go down. We're not going to play games and try to present an illusion that something is bullish, when in reality, even above all that, it isn't bullish. So again, I have talked about in the past, I've talked about the pecking order. And I call it the pecking order because really that's truly what it is. And up at the top of that pecking order, which sits at the top, food chain pecking order, whatever you want to call it, are interest rates. Whatever happens in interest rates filters down through everything else. Everything else in one way or another is dependent on what interest you can receive or what interest you have to pay. So interest rates sits at the top of the food chain. And then it comes under that, you have the currency, and what comes under that, you have equities in the bond market. And then under that, you have equities, precious metals, commodities. Interest rates affect all segments of our economy because there's money being borrowed and lent. And so it's what rate that transaction starts and finishes at as it filters down through the system. As it filters down through our economic system, we get to feel it. So on a consumer level, we get to feel it because if interest rates are going to go higher, you can start to anticipate that the banks, Citi, Chase, Bank of America, Bank of the West, Wells Fargo, you name it, Goldman Sachs, all of them are going to be jacking up the rates even more on what they lend at. So you want to borrow, whether it's for a position, whatever it is for, you're going to be paying more. And it's going to be a whole lot more than where rates are. That's just the name of the game, but that's on us, the consumer. That's how far it's going to go. And you're going to pay more at the grocery store, and you're going to pay more for gas, which they, by the way, they've conveniently taken out of, consumer inflation numbers, excluding energy and food. Oh, the two things that most of us in America really can't live without. So, in any case, we get to that point where the market begins to feel that something's up. Now, What I do think, this is 2, we're coming off in 3, we're waiting for the cleaner development. This is kind of sloppy, but I can take it as like a first wave of this next sequence. And that's kind of a wave 2 of this next sequence. And now we're basically in the third, which should continue to fall. So I want to go, now I do want to go back out to the, I want to start, let's start with the hourly. And I'm going to put in Fibonacci for a third wave. And again, now we're down and we're doing a minor third wave, not the intermediate. That'll be coming up next. So I want to put it into this and go there, down to here, up to here. 96, 80. Just to get this right. All right, so let me just go make, well, this is, I'll put the fine adjustments on, check back later. And they'll be all updated. In any case, they are updated enough, but here's what we're kind of looking for is this minor third wave starts to unfold. And again, we continue to use the same Fibonacci levels, same numbers, because it's a third wave, and the third wave is associated and related to the first wave, impulse wave. So we're just measuring our next impulse wave against the one that's just occurred. It just happens to be on a minor degree level. So we're looking for minor 3. And so the same givens, in other words, the same numbers are being used again. Wave 3 often comes in at 1.618 times the length of wave 1, and that's 12,010, 12,011. So we got a little bit of a trip within this third wave. So it's telling us that it does begin to tell us, first of all, wave 3 would be equal to wave 1 at 12,884. That's where it would be equal. And being that this larger move, intermediate 3, is the longest and the strongest wave within that degree drop, within this degree, the minor degree, we're in the third. It should be the longest and the strongest within this sequence. So, and again, we're then measuring it out against the next sequence up. So as the degree becomes higher, of course, we're starting at a higher level, we're looking for a lower level. But now we're doing the steps, taking it down. And that could be the next move. So in other words, we may just start to drop more precipitously because that's what the numbers are suggesting. The Elliott is suggesting, and everything kind of just falls into place. Let me just kind of open it up a little bit. And you can see we're dropping. We've drifted below 13,800. We're now got back above it, but they're not racing this thing higher. It's waiting to see what the next group wants to do. We need more information. Are we selling it down to the next level, et cetera, et cetera. Now, we already have our numbers, 13,758. The low thus far has been 13,792. So our first support on the way down, not any that's going to stop it and turn it and make it be bullish, but just a pause, would be 13,758. Then we have 13,590. And then we have 13,425, 13,302, 13,187, and the 100% at 12,885, I'm going to call it. But we are looking with potential for 12,551, 12,345, 12,010. Then we get a wave 4 and minor wave 4, and then a minor 5, and then that completes this larger intermediate degree wave 3. So now I'm going to go back out to that daily, because now I want to take a look at what's the potential. Where can it go? Same difference. I'm using Fibonacci extensions, and I'm going to put them here. And I'm going to compare wave 3, which is now being more confirmed, is in force. It is working its way. And there's a high and a low. So the minor degree is going to be on the inside and the intermediate degree is on the outside. And if I drop it down back to that hourly, you'll see it as so. Here is the minor degree, here is the intermediate degree. We're taking a look at where we believe intermediate wave 3 could end up. There's the minor. Same deal, folks. 1.618 of the length times the length of intermediate wave 1 comes in at 9,036. That's what I'm looking for, eventually for this market to work its way down there. Again, we're talking a 4,000 point drop. Yes, it's a shake to the system. Yes, it would be kind of going below areas that we have been to within the last several years. But in all honesty, several years, no. The last 2, yes. Because this, oh no, I'm going to this here. It's up here, way up here. I just go to the monthly chart. 9,000 is on the way because I believe that our primary degree wave, well, that what we're working on there, I think that's where it comes in. So it'd either be primary A or it'll be a primary 1. Primary 1 would say we're really going to the sewer. So I'm going with primary A on this one, even though if this ends up being 5 waves down, well, then there could be something very different. But I am looking for the primary degree initial wave to come down to the area of the 4th wave of 1 lesser degree. And since I'm looking on the cycle level, it's going to be within primary. And that's where I'm looking. So I'm looking for this initial leg to come down and find its support in the area of the previous 4th, which basically goes from 97.63 down to 66.29. And then we have a B wave rally. We have a decent, tradable, crazy trading rally. Because in all honesty, most of the fundamentals, if you want to call them that, and a lot of the technicals that we'll still be getting coming out of the interest rate markets, come out of the dollar, coming out of individual stocks as we go through earnings seasons, that's all going to get translated, squashed, pushed, manipulated, and thrown into what we look at on the NASDAQ as all of its component stocks go through their individual moves. Unfortunately or fortunately, most of them on the larger picture should be going in the same direction. We may have one within that is just off on a tear all by itself, and it's got its own reason. I'm sure those are black swan events as well. So we have tons of things that are going on. In any case, I am now getting a little bit too long in this particular update. So the bigger picture, that's what I'm still looking. I think 9,037 or this 9,000 number, the 1.618, I think it's very doable by the end of May. There are a lot of cycle lows that come in there. And so there's a lot of things that kind of do line up time frame. So the time frame kind of fits. The intermediate third wave unfolding in a month and a half. Yeah, be pretty quick, but it is absolutely can do it without a problem. So we'll see. Now, for tomorrow, I think the market has already let us know that we ran the potential that this would have been ABC A, and this would have been a B wave, but the B wave we would not expect. See, we weren't breaking to new lows like we did already. We weren't drifting below with the lows from last week. And more importantly, the 13,885 low that we saw on the 12th again. So 13,881 being that low. Nope. Yeah. And we blasted through it. In fact, we dipped below 13,800. We're now again, we're back above it. You know, buyers and sellers, people got to come in, people got to do this, whatever they're doing, they're doing. But I would believe it's going to continue to go down. We have support. 13,758, again, 382 in terms of the minor third wave, just a pause. The 3591, just a pause. But it begins to do one thing that it will have to do, and only because wave 2 came in so shallow. And that would be that the market goes, it has already broken below 13,815. So wave 3 has already broken that. But you're definitely going to be looking for it to continue 591, 424. It's going to start to break down. If we go down and have a pretty severe dip, we could be down 300-400 points. And it may be because it's a third wave, because we're entering into a point of recognition within the whole cycle, then we could go quick. So I would be looking for that either. I don't know if it's going to happen tomorrow, but I'd be looking for it at certain points at the beginning of next week. In the absence of absolutely turnaround bullish news, which I would be surprised to see where it would come from. I'll leave it at that. So moving averages are pretty much lined up to go down. So we got that starting up here on the daily. There's the 200, the 50, the 20's gone below the 50, the 8's below the 20, the 4's below, the floor's at the bottom. So we are lined up on the daily chart to go down. And obviously, I'm going to say that all the rest of them are doing the exact same thing. So we are, in fact, on the hourly chart, we're dropping pretty strongly in terms of the 8, the 4, and the 20 are pretty much pointing straight down. The 50's getting there. The 200 is, do you see how that slope has changed? The 200's getting there. So it could, that's just where it could gang up. So all of these factors gang up on anybody that wants to step in and buy it, because they'll be looking for you. I'm going to leave it there. I know I went on a little bit, but I wanted to fill in some of the blanks and kind of just update. And I've been told that I should do that on a Sunday instead of during the week. Okay. Have a great trading day tomorrow, and the next update will be on Monday, the 18th.